I will describe who we are, Link Rescue, what is business continuity. The essence of today's webinar is really the business continuity plan, and I've broken that down into 7 subsets, sub-elements. Getting started, risk assessment, business impact analysis, the response plan elements, communication of the plan, exercises to keep the plan up to date, and maintenance. Risk management is what we do. We also have a product called CalcuRisk. We make CalcuRisk, and CalcuRisk is a risk management information system. We have developed a version for credit unions, as some of you will know, that has detailed content for credit unions. The product, as you know, uses the process that is described in the ISO 31000 standard. It's a risk management process that has been around for about 15 years now, because it was in the Australian standard previous to that. It's a well-tried and tested process. Many of you will not know that we have a sister company called WARS, Work Area Recovery Solutions. WARS is about if you do lose your premises, that you have some place to go. We have, in Ennis, we have 200 desks, telephones, PCs, such that any of our WARS clients can move to Ennis and be up and running generally within about 2 hours. Okay, so that's our background. Business continuity. Business continuity is about the capability of the organization to continue delivery of products and services at acceptable predefined levels following a disruptive incident. Now, I only have one problem with this description, that it sounds like business continuity, it's all about focusing on the disruptive incident and how you respond to that. I'd like to think, as a risk expert, that half the battle is preventing the disruptive incident in the first place. More about that in a while. We're going to look at the plan. As I said, 7 elements, and we're going to start with the getting started. First and foremost, you need board support. If you don't have the board supporting your efforts to put together a business continuity plan, it will be a struggle. I would suggest you agree broad objectives with the board. What are they expecting to see in 3 months and 6 months from the plan? And you might start with the outline that I've shown in the plan in terms of doing the business impact analysis, doing the elements for the response plan. And that might be your first target. Indeed, you'll need a budget to bring it that far. And I'm saying phase 1 of the budget, because you'll need not a huge budget, but a small budget to develop the plan. And as you develop the plan, you may realize that there is some other spending you have to do to reduce the recovery time, to make it possible to recover within the time that you have deemed important for the survival of the credit union. You need to decide early on who is involved, and certainly I would include people from each function, key function in the credit union. Now, smaller credit unions, it'll be smaller number of people because it'll be multitasking. But consider as well whether you want to involve somebody from outside who might look over your shoulder as you write the plan, or indeed who might write the plan and you look over their shoulder. Always good to have maybe an outsider's view. And you should be including your key service providers. I'm thinking of, in particular, your banking system providers, who are probably, for most of you, it's the critical system. Now, they don't need to be involved at every stage of the development, but you do need to involve them as a part. Step 2 is, and I would start with a risk assessment, a credit union-wide risk assessment, so that you get familiar with, one, what the threats are and what the consequences are for you, because it's those consequences of those risks that are significant or substantial that you need to address in a business continuity plan. So conduct a credit union-wide assessment, know your legal obligations, because indeed in a business continuity scenario, you've got to remain legal, you've got to continue to protect the data of your customers, you've got to continue to deliver on your legal obligations, and very importantly, know what your insurance covers. Many organisations only find out when it's too late that their business interruption insurance or property damage insurance only covered a fraction of what they thought it was. So I would suggest you check that out before you have an incident. In doing the risk assessment, you will learn what can cause significant disruption. You will learn what the consequences will be for your organisation. And if you can identify those causes of disruptions, be it power outage, communications loss, you'll have a better understanding of what it would mean for your business and for your members and for your profitability should that happen. Don't exclude, I would express positively, make sure you include key suppliers. If you're dependent on Fern or Progress or Wellington or Octagon for delivery of key functions, you need to know that they have a good business continuity plan as well, because a disruption of their premises or their systems could quickly become your disaster as well. And if you're dependent on the banks or the post office or other partners, again, consider them in your plans. As I said, prevention is half the battle. If you understand the risks and you understand what you've in place, it's better if you don't have a disruption in the first place. For those of you who are customers and have CalcuRisk, there is a risk in the system called failure to have an appropriate business continuity plan in place. And there's a good set of questions in here. There's about 20 plus questions, which will give you a good business impact analysis. This is an important step, because you need to identify the critical business functions that some people call them mission critical functions, critical activities, but it's those things that you need to continue to be doing to be seen as to be continuing to provide the service. If you focus on the risks that can cause significant or substantial consequences from your risk assessment, that will point you in the right direction, because that will tell you the things that you've already identified that can cause you serious problems. But once you step into the process of identifying the functions, you sit down with heads of departments or key functions in the organisation, in the credit union, you quickly come up with a list of those mission critical functions, like counter transactions. I mean, deposits and withdrawals, I assume that that's something that you need to be able to continue to provide, or at least within a short space of time. How important is the telephone system and call recording? How important are your online services? Do people use your online services to pay bills and to transfer money? How important is foreign exchange? Maybe that's something that is not critical and you can live with that for a couple of days. Lending, again, maybe it's something that you can suspend for a few days while you focus on delivering what you can and trying to get back to normal. So identify your critical functions first. When you've identified the critical functions, you need to look at the dependencies, the key dependencies, things that you also need to have to be able to carry out those key activities. For example, the banking system. If you're trying to do counter transactions, you need a banking system. Does the banking system require internet connectivity? Do you need your telephone system? Do you need printers, stationery, forms, headed paper, dockets, cash? Make sure you account for that in your business continuity plans. And if you need cash, and think you may not be at your premises, you may be in a remote office, do you have a safe? Do you have the physical security? So as you identify the key functions, key activities. Note also the key dependencies that you need to be able to deliver the service, deliver the activity. A couple of abbreviations now that I promise it's only these four, but important that you consider them. The maximum tolerable outage, or some people call the maximum allowable downtime, the MAD or the MTO. It's how long you can be away from your customers, from your members. How long before people start considering that you have a major disaster in your hands, before you start losing money. Now, you might measure this in hours, you might say it's 2 or 4 hours, it might be a day or 2 days. Depending on how long or indeed how short that is, this will influence your strategies later in what you need to have in place. If you need to be back in 2 hours, then you probably need to spend a bit more money on systems and preparations. The recovery time objective, RTO, that's the time it takes to get back up and running from where you press the button, from where you say to your IT service provider, we need to go to the recovery plan and start now. And it's generally shorter than MTO, but it's something you should consider. If you've decided that the business can't be away from the customer for more than 4 hours, then the RTO that you're saying to your IT provider is, I suspect, 3 hours or less, because typically you don't call the other people, you don't start the plan the first minute you have a disaster, unless of course the building is in flames at 9 o'clock in the morning. You immediately press the button, but generally people try to fix it and they only press the button maybe an hour into the disaster. Consider that. MES, the minimum essential service. To get back to where you're delivering, I'd say the minimum, and what people consider is your continuing operations. You have continuity of business. You need to decide what that is. And so maybe you do without the lending, but as long as you can take money and give out money, that might be enough for you. And you might limit the amount of money. You might say we will only give out payments of up to 1,000 because we've limited cash, whatever the reason. You decide what your minimum service is. Decide who you need and who you don't need. And maybe for a few days you don't call customers in credit control, and credit control and lending are doing other things to get the business back while you suspend those services. The other thing you need to decide at this stage is, if you do have a disaster, if you do have a disruptive incident that causes a system to be lost, how much data can you afford to lose? Can you go back to last night's backup if you have a disaster at 5 o'clock today? Or do you need the details of those transactions that you did today? So if you need those details up to 2 minutes ago, then you need to make sure that the backup is being done simultaneously, almost mirroring what you're doing on site to off-site, so that you have no loss of data. But if you take your telephone system, and if you're recording calls, as many of you do, maybe it doesn't matter if you lose today's call recordings and you go back to last night's. That is a decision for you. If you have to record all calls and keep recordings, then you need to be backing up them by the minute as well, but I doubt it somehow. This is a template which I've included in a document which we will give to you after the webinar. It's a simple form where you can document what your key activities are, be it counter transactions and description of that, the systems and the dependencies you have to be able to carry out that activity. All the dependencies, not just the system, but if you need an internet connection, if you need cash, if you need dockets and forms, write it all down, because in a disaster you want to make sure you still have them. It would be unfortunate if you did 95% of the providing what you need and couldn't deliver the service because you were missing some dockets or forms. Write in this form your maximum tolerable outage for each of these activities, because they won't all be the same. Some things you can do without maybe for 2 hours, some 4 hours, some 8 hours, some 24 hours, some 48 hours. And if you write that in, you'll automatically have your sequence in which you need to recover these activities. Because when you have a disruptive incident, you won't have enough resources to get everything back within 2 hours, so you need to prioritize. And this is the way you prioritize, by deciding how long can I live without this activity. And the RPO is, again, how much data can you afford to lose. Okay. Now onto the response plan. The response plan, as distinct from the business continuity plan, which includes everything, the response plan is, if you have a disruptive incident, the first thing maybe you need to do is assess the incident. How bad is it? How much damage is it? You know, if it's the roof has collapsed in, can you still operate? Do you need to leave the building? So quick incident assessment. If it's a fire, or if it's a flood, or if it's somebody seriously injured, it might be an emergency response. Who do you call? Is it the Gardaí? Is it the ambulance? Is it the fire brigade? Who's going to make that call? So have a response plan for emergencies. Indeed, I think most of the plan can be generic. You don't need a plan for every single incident, but do consider specific incidents. The typical ones: the fire, the flood, the physical damage, system failure. But there's an 80% chance that the next disruptive incident you have won't be on your list. You know, could be a riot outside your credit union and somebody maybe crashing a car into the window, something you haven't considered. But your plans should be generic enough to cope with any incident. Always consider that. Just use the specific incidents maybe to inform the thinking and to provoke a bit of initiative around solutions. Coming to strategies, if in your business impact assessment you have decided that there are a lot of activities that you need to get back up and running fairly quickly, and by fairly quickly I mean around the 2-hour mark, then you may have to spend on duplicate systems, backup systems, mirroring systems. Certainly a UPS, that's an uninterruptible power supply and generator, if you don't already have them, might be one of the first things you'd consider, such that if the ESB was to go, that you have no downtime, that you continue operating. So have a look at that. Have a look at the, depending on the disaster, what the strategy is for recovery. The plans should also take account for how you're going to communicate with the members of the board, with the members of the credit union, with the central bank. And bear in mind that you may not have a telephone system. Your switch might be gone. Indeed, if it's a regional disaster, the whole telephone network might be down. The mobile network only takes 3% of customers to press the call button for the mobile network to go busy. So don't assume you will have telephones, but certainly plan for if you do and plan for if you don't. And last but not least in the plans, consider going back to normal. Who's going to organize the clear up of the building if it's flooded or burnt or damaged? Who's going to organize the restoration? Who's going to call the insurance company? Who's going to get the money from the insurance company to build rebuild the office, repair the damage? You know, there's a lot you can do now to have, I would say, basic outline of a plan of recovery back to normal. If you have to close your offices for a week, there's a fair chance that things like credit control and lending and other things will build up. You'll have a backlog of work that now has to be caught up on within probably the next 2 weeks. So consider that. How do you address the backlog? These don't have to be detailed plans, but I would say plans to inform the activity when you do have a disruptive incident. Communication outside of disasters. You don't keep this plan in your safe and don't tell anybody. You do the opposite. You make sure that everybody knows their role and what they should do in the event of a disaster. That's probably number one. So that if a disruptive incident can be quite stressful, but if people have a role to play, know what to do, they're happier and you'll respond to it far better. The time to be turning in their role is not in the middle of a disaster. It's well before. Again, know your priorities. What's the first thing you need to get back? Who's the first person you need to call? Make sure your suppliers know about your plan. Make sure your suppliers know what you're expecting of them if you have a disaster. And in the emergency, have it decided beforehand who will speak to the press, who's going to stand in front of the RTE microphone and explain what is happening and what you're doing to protect your members' credit union. Deciding who's going to contact the suppliers, who will be the liaison person with the ambulance, the fire brigade. All of these roles and responsibilities should be decided beforehand, and always have an alternate, because you can be sure that somebody will be on holidays when you have a disaster, and if they don't have an alternate, a backup for their role, then that function, that activity in an emergency will probably be omitted. So have somebody responsible and have an alternate. You've got your plans, you've done your impact analysis, you're ready for disaster, but are you? Because if you haven't tested the plans, they're not going to work. I think it was Eisenhower said, planning is everything and plannings are useless. But to make your plans useful, you have to exercise them, you've got to test them, you've got to make sure that they work when you have an incident. And the way we do that is three types of tests. There's component testing, there's a scenario tests, exercises, and live tests. Component testing is about taking an individual component of the plan. Take the IT procedures to do a data restore. You can test that in isolation, make sure the procedures work, that the data, first of all, was being backed up in the first place, and when it is restored, that you can actually read yesterday's records as you expect. A lot of you probably have call trees, telephone numbers of people you call in the event of a disaster. When was the last time you tested those? Numbers change. I can tell you that about 20% goes out of date every year. So worthwhile testing those. Again, it's an individual test that doesn't, none of these are significant cost, take a bit of time, but important that you test the individual bits of the plan. If you are planning to move to a different office, are you diverting your telephone lines to that office? And have you tested that diversion? If the diversion has to be done from outside your office rather than inside because it's on fire, how do you do that? Have you tried it? Let's look at tabletop exercises. With the tabletop exercise, it's basically about a 2-hour session, maybe sitting around the board table, picking a scenario. If we take power failure as an example, and saying, what if power was out to the whole village? What do we do? If the power is just out to your building and everybody else's power, then you'll certainly have less sympathy because people won't be expecting it. But what do you do? And who do you call? And what's the plan of action? If you step through a scenario like this and ask yourself questions about preparedness and who does what, you will identify gaps in your plan. You will identify areas, always with these exercises, you'll identify areas where you can improve. And it's also useful for familiarizing people with their role in a disaster or disruption scenario. The advantage of an exercise like this is that there is no disruption to business. You're not affecting any live systems. The only cost is really in your time, but very valuable to do. The final exercise type that I would describe as live exercise. It's larger scale, costs a bit more in terms of time and money, But if you do plan to move to a sub-office and run the business from there, try it someday. And maybe you try it on a day when you're not normally open. Some people will love me for that comment, I know, yes. But, try actually doing it. Move the staff and see, can you work from the other office? It's amazing what you'll find out when you try to do these in practice. We make a lot of assumptions, and it's only when we actually do this for real that we find out things we never knew before. Things like physical security. Don't assume that physical security will be, if you're talking about working from a hotel, have you considered physical security? If you've got a lot of cash that's available in an insecure, unsecure environment, it won't be long before the opportunists hear about that and you're exposed. So maybe an exercise will highlight some of these gaps in your plans. Again, the advantage of this is people understand their role better, they get to see how it works, and you get to see gaps in your plans. Plans go out of date. So whenever you do an exercise, make sure you update the plan, even if it's just updating a call list or updating a name who's responsible for something, updating a procedure. Certainly if you've had a disruptive event, and I'm sure you have them more frequently than you realize, whether it's a power outage for a short time or whether it's a system down for half an hour, there's hardly a week, I would say, that goes by that you don't have some kind of disruptive event. And there don't have to be systems, there doesn't have to be the fire and flood, it could be somebody coming into the credit union and creating a scene. But each time you have a disruptive event, consider, do you need to modify the plan? Auditing of business continuity plans should be on the audit schedule, and I'm sure that after every audit there will be suggestions as well, another time to update the plans. Update lists, suppliers, if suppliers change, if they move, if people within the suppliers move, the names, keep your lists up to date. Keep a copy of your plan off the site. Indeed, if you keep it on your system that you back up every night, then you have a soft copy wherever your backup is stored. I would say if you print off hard copies of your plan, make sure that you take the old copies out of circulation. They're only a distraction, and make sure that when you do update it that you change the version number so that you all know you're all working off the same plan.